Happy New Year, everyone, and welcome back to the channel. We're kicking off 2026 with a bang, and as is tradition, the first day of the month brings a major event in the XRP ecosystem. Ripple's monthly escrow unlock, and this one is a doozy. Just as the fireworks were settling, a whopping 1 billion XRP tokens were released from escrow, split into two transactions of 500 million XRP each. This is standard procedure, something we see every month, designed to provide a predictable supply of XRP for Ripple's operations, partnerships, and sales. But this time, something is different. This unlock came with a message that has the entire XRP community buzzing, and frankly, a little on edge. Attached to one of the transactions was a memo, a controversial end-of-year message that has stirred up a lot of debate. Now, what did this message say? Well, it hinted at Ripple's plans for its XRP sales moving forward, specifically mentioning an intention to potentially sell more XRP throughout 2026. This has, as you can imagine, sparked a firestorm of discussion. Is this a sign of aggressive expansion and new partnerships on the horizon? Or is it a move that could put downward pressure on the XRP price? The community is split right down the middle, and today we're going to unpack all of it. We'll look at what this message could mean, examine the historical context of Ripple's sales, and analyze the potential impact on the market. Before we dive deep into the memo's implications, let's take a quick look back at how 2025 wrapped up for XRP. It was a year of incredible highs and some frustrating lows. On one hand, we saw phenomenal growth in institutional adoption. RippleNet and the on-demand liquidity service, now known as Ripple Payments, expanded into new corridors, onboarding major financial institutions and payment providers. The utility was growing, the use case was being proven day after day, and the fundamental value proposition of XRP as a bridge currency was stronger than ever. The legal clarity achieved in the SEC case continued to open doors in the United States and globally, leading to partnerships that were previously on hold. From a business development perspective, 2025 was a massive success for Ripple. However, if you were watching the charts, the story was a bit different. Despite all this positive news and fundamental growth, the price action for XRP was, to put it mildly, bearish. Many holders and investors were left scratching their heads, wondering why the price wasn't reflecting the real-world adoption. We saw moments of excitement, sure, but the overall trend was sluggish, especially when compared to other assets in the crypto market. This created a disconnect, a frustration that has been simmering within the community. So, when this new message about potentially increasing sales in 2026 dropped, it landed on fertile ground for concern. The fear is that if the price was already struggling, wouldn't more selling from Ripple just add more fuel to the fire? So let's get into the heart of the matter, the memo itself and what it could signify. The message, while not explicitly detailed, has been interpreted by many as a signal of Ripple's confidence. The argument from the bullish camp is that Ripple wouldn't plan to sell more XRP unless they had a clear pipeline of demand. This isn't about dumping tokens on the open market. Ripple's sales are primarily programmatic sales to institutions and partners who need XRP for their operations using Ripple Payments. So, an increase in planned sales could directly correlate with an increase in ODL volume and the onboarding of new, large-scale partners. Think about it. A major bank or a country's central bank deciding to use XRP for cross-border payments would require a massive amount of liquidity. Ripple would need to supply that liquidity, hence the need for more sales. In this view, the memo is a bullish indicator of explosive growth to come in 2026. It suggests the business is scaling up significantly. Now, let's look at the other side of the coin, the bearish interpretation. The skeptics and concerned investors see this differently. They argue that regardless of who the buyer is, selling a billion XRP, or even a fraction of it, adds supply to the market. If this supply isn't met with equal or greater organic demand from the retail market, it can create sell pressure that suppresses the price. The worry is that while Ripple's business grows, the token holders are the ones who bear the brunt of this price suppression. This has been a long-standing debate in the community. Is Ripple's success directly tied to the XRP price, or can the company thrive while the token's value languishes? This memo has reignited that debate with a vengeance. The fear is that 2026 could be another year of fantastic business growth for Ripple, but frustrating price action for XRP investors if these sales are not managed with extreme care. To understand the potential impact, we need to look at how Ripple has handled its escrow and sales in the past. Historically, after unlocking 1 billion XRP, Ripple relocks a significant portion, typically around 800 million XRP, back into new escrow contracts that will unlock in the future. The remaining amount, usually about 200 million XRP, is held in their treasury to fund their operations and supply their ODL partners. The key here is that unlock does not mean sell. The company has been very transparent about this process in its quarterly XRP markets reports. They detail exactly how much was sold, to whom, and for what purpose. For years, they've been methodically reducing their programmatic sales on open exchanges and focusing on these over-the-counter institutional sales. So, the question for 2026 is, will this pattern change? Will they start relocking less and holding more in their treasury for sales? Or will the total volume of their ODL sales simply be larger, requiring them to use that full 200 million XRP each month, or perhaps even more? If the memo points to the latter, that is, a huge surge in demand from new partners, it could be incredibly bullish long-term. A larger volume of XRP being used for its intended purpose is the ultimate goal. It validates the entire thesis. However, the market is driven by sentiment in the short term, and the sentiment right now is one of uncertainty. The mere suggestion of more selling can be enough to spook investors, regardless of the underlying reason. Let's also consider the broader market context. We are in a very different environment than we were a few years ago. The crypto space is maturing. There's more regulatory clarity in some jurisdictions and more scrutiny in others. The macroeconomic climate, with inflation and interest rates, also plays a huge role. For XRP to thrive, it needs more than just Ripple's success. It needs a favorable market environment, continued growth in retail interest, and a narrative that can capture the imagination of new investors. A narrative about a company constantly selling its token, even for good reasons, can be a difficult one to spin positively in a competitive market. Other projects don't have this dynamic, which makes it a unique challenge for XRP. So what's the bottom line here? What should we expect in the coming weeks and months? The first thing to watch will be the relock transaction. We'll soon see how much of this 1 billion XRP Ripple puts back into escrow. If they relock the usual 800 million, it might suggest that the memo was more of a forward-looking statement for the entire year, not an immediate change in strategy. If they relock less, say 600 or 700 million, that would be a clear signal that they are preparing for larger sales in the near future, and the market reaction to that will be very telling. Second, we'll be eagerly awaiting Ripple's Q4 2025 XRP markets report, which should come out in a few weeks. This report will give us concrete data on their sales at the end of last year and might provide some commentary or guidance on their plans for 2026, hopefully clarifying the intent behind this controversial memo. Ultimately, this situation is a classic example of the tension between short-term price action and long-term fundamental value. The message from Ripple can be interpreted in two completely opposite ways. It's either a sign of immense imminent growth in utility that will eventually drive the price to new highs, or it's a signal of continued price suppression that will frustrate investors in the short to medium term. The truth is likely somewhere in the middle. Ripple needs to fund its global expansion, and using the asset it holds is the logical way to do it. The challenge is balancing this need with the health of the XRP market and the sentiment of its dedicated community of holders. 2026 has certainly started with a jolt, and it looks to be a pivotal year for both Ripple and XRP. We'll be here covering every development. What do you think about this memo? Are you in the bullish or bearish camp? Let me know your thoughts down in the comments below. Thanks so much for watching. If you found this breakdown helpful, be sure to hit that like button and subscribe to the channel for more updates on XRP and the entire crypto market. Don't forget to ring that notification bell so you never miss a video. Stay informed, stay safe, and I'll see you in the next one.